In today's video, I'm going to be discussing bank accounts and your Social Security benefits, including but not limited to Social Security retirement, disability, SSDI, survivors, spousal, SSI, VA, and of course RRB. That's the focus of this video. Let's get into it and talk through the details. All right, now as you've probably been seeing in the headlines or hearing out there, or maybe even seeing right here on the channel in some of these videos that I've been bringing to you over the last few days, the last few weeks, and the last couple months, there's a lot of economic turmoil and there's a lot of political turmoil out there right now that is also going to be extending through the rest of this year. As we all know what's going on, it's a very busy time, and I've been saying this for many months now. 2024 is going to be a busy and dramatic year, and we're already seeing that as of now. But what does this mean for you and your fixed income benefit? Again, all the beneficiaries I mentioned at the beginning of the video, not limited to those people, but what does it mean for you, your bank accounts, and of course your monthly benefit, and is this going to have any impact whatsoever? Again, great questions, and again, what I want to focus on here in this video, because this is actually a very important thing. Remember, where are your benefits deposited into every single month? For most people, it is right into a bank account, a checking account, a savings account, maybe onto your Direct Express card, but the vast majority of people do get their benefits deposited into a bank account every single month. Okay, so what does this mean for your benefits? Again, great question, and why I want to focus on this, because I've seen some questions down below in the comment section over the last few months here coming in from those of you here in the community reaching out asking, what is this going on? I'm scared, I'm worried, is this going to impact my benefit? What does this mean for me going forward? Again, breaking it all down for you here in this video. All right, so let's talk about bank accounts, and again, this is all encompassing. You could be banking at a bank, just a standard bank, one of these big banks you see out there, a little local regional bank, something like this. It could be a credit union, anything like this, wherever you are having your banking. Again, the list goes on and on. There's thousands and thousands of options. It's all just going to be covered here, okay? So again, if you're focused on, a little regional bank or a little local bank, like one-off, little hole-in-the-wall bank, again, doesn't matter. It's all one and the same here, okay? It's basically all under the same regulations. It's all under the same rules, and it all applies across the board, okay? So if that applies to you, this is what I want to talk about, okay? All right, so your benefits are deposited into your bank account or whatever type of account you have every single month. Very nice, right? Every single month they arrive for you, and then you can just do whatever you want with them. Again, same old story here, and of course, this includes your higher benefit because of the raise you got back at the beginning of the year. Again, things have been going on here for a few months now. However, what goes on here in the event that we continue to see all of this economic turmoil and political turmoil playing out here, and potentially we start even to see some of these banks going under? Again, a major risk that is out there right now. There's major defaults that are happening across the board. Businesses are going under. People are losing their homes to foreclosure. Again, very sad situation. The commercial real estate market is not good right now. A lot of loans defaulting, a lot of vacancies and things like that. Who do you think all this is coming back on? Is it us, the people, or is it the banks, the financial institutions? It's the banks, it's the financial institutions. Why is that? Because they are the ones who have all the loans on these different items, right? Commercial loans, real estate, homes, things like this, right? So who holds the bag at the end of the day? Well, if somebody stops paying and they just walk away from their commercial building or something like this, or their home, then guess what? Then the bank is sitting with all of that debt, and they need to actually, sell off the product, whatever it happens to be, okay? But what does this mean? Again, at the end of the day, what does it mean for you and your fixed income benefit? It simply means this much. Not a whole lot, except for what happens if your bank disappears? What if it turns into a dinosaur and there's nothing left other than just basically, the remnants called the building, and there's no business left inside of it called a bank, right? Well, then you just have an empty building and there's no more bank there, okay? But what does this mean for your monthly benefit? Here's what it comes down to. In the event of your bank going under or disappearing, going bankrupt, or whatever it happens to be, whatever we want to call it these days, in the event of something like this actually happening, it will not have any impact on your monthly benefit, okay? Your benefits are fine, as in the event something happens, okay? Now, here's the thing. I want to point this out really fast here. Banks are protected by FDIC, and credit unions are protected by NCUA in general. This is not something that every single financial institution has, but Any good financial institution should have this protection. All it is, it's an insurance policy on the depositors, okay? Remember back in early 2023 when we saw these banks going under, in fact, like Silicon Valley Bank, we saw that one go down. We saw a couple other, Signature Bank, I think it was. There's a couple others that went under like really fast there. In a matter of just a couple weeks, there was multiple banks that went down. We were starting to think, uh-oh, this is the start of the big crash, right? Well, that was a very scary situation. The situation was the depositors are protected in these accounts when they have FDIC insurance or NCUA when it comes down to credit unions, okay? This is basically just an insurance policy. Now, is it for infinite amounts of deposits? No. In general, it's up to $250,000 per deposit account. Okay, so if you have a bank account, let's just say it's a checking account. I think most of us probably have a checking account, right? If we have a checking account and you have, say, anything under than $250,000, $250,000, if you have anything less than that in your bank account and you are banking with a financial institution that has FDIC insurance, then in the event of insolvency, as in the bank goes under, it disappears, it's bankrupt, gone. Guess what? Your deposits are protected up to $250,000. FDIC insurance will pay those benefits out or the deposits out up to that $250,000 level. However, let's use a quick example here. Remember with, for example, Silicon Valley Bank, right? Back in early 2023, when that went down, there were people that had deposits in the millions, tens of millions of dollars of deposits in the bank account. Technically, all of that would have been lost except for the $250,000 that was protected by FDIC. But instead, they got bailed out. Seriously, this is a real thing, okay? They got bailed out. Who bailed them out? Well, that's up for debate, but a lot of people are saying the taxpayer, we bailed those people out, okay? But then again, depends on who you ask. Some people say, oh no, don't worry, it was not taxpayers that bailed them out. Okay, whatever. That's what happened back in 2008 when all the banks failed back then too. It was the taxpayer holding the bag at the end of the day, us that had to bail them out. So, same situation here. My point is, I don't think anybody here in the community has millions of dollars sitting in a bank. If you do, congratulations. That's awesome. I'm happy for you. And honestly, I'm a little bit jealous. Let me know what you did because I want to, be able to do that too someday. That'd be awesome. But that is not the case for anybody, for most people anyway, okay? As a result of that, in the event of any insolvency, in the event of any type of bank or credit union going under and closing their doors, being bankrupt, stuff like this, your benefit checks will not have any impact. Now, let's just say the Social Security goes to deposit a check into a bank account for a bank that has gone under, that is closed. Well, can they do that? Probably not, because the bank accounts are probably frozen at that point because the bank no longer exists, right? It has gone bankrupt, okay? So what would happen there? Well, then you probably need to figure something out with Social Security to find out a better place to deposit those payments. But long story short, in the event of a major bank collapse, as in a bunch of financial institutions go under, like what we saw in 2008 and early 2023, then, if we see something like that, your payments will be fine. Whatever money you have sitting in a bank account, provided it is protected with FDIC insurance, or if it's a credit union, NCUA, provided they have that coverage, you're fine. For the most part, it'll take a few days, maybe a week or two to get that money paid out through the insurance policy. But other than that, it's protected for the most part, right? Now, again, I know there's a lot of people out there that say, oh, we can't trust banks anymore. Let's pull all of our money out and sit on cash. I wouldn't do that, okay? Just a variety of reasons. Again, I'm not going to sit here and advise people what to do. That's not what I'm doing here, okay? So you do whatever you want, whatever you see fit for your situation, for your comfort level, stuff like that. But I certainly would not want to sit on a bunch of cash. I mean, maybe $100 or something like that, fine. It's fine to have a little bit of cash around, a little tiny bit. But sitting on thousands of dollars in cash at your house, I would not do that. There's a lot more risk there of a variety of different things happening to it than it sitting in a bank, and the risk of that bank going, gone, disappearing through bankruptcy. Would not be doing that as far as cash sitting around. So anyway, when it comes down to your fixed income benefits, and again, the economic turmoil, the political turmoil, everything going on with the economy, and potential risk of a lot of financial institutions going away, as in disappearing, this is just something we need to focus on. But as of right now, I wouldn't really concern I wouldn't be concerned about it. Again, just remember, they have that insurance for a reason, okay? It's to protect the depositors for the deposits up to 250 grand. And again, that's going to cover a vast majority of people that have bank accounts less than $250,000 in deposits in their bank accounts, if that kind of makes sense, right? So, long story short, when it comes down to your fixed income benefit, there's not really anything to worry about, okay? So for those of you that have been reaching out, leaving comments down below asking, is this something I need to be concerned about? Should I pull all my money out, stuff like this? I wouldn't do that. There's just no need to, okay? Hope that kind of helps you out. But again, not advice in any way, shape, or form. Just kind of breaking the situation down, letting you know what all this means and what it looks like going forward. Does that kind of make sense? Anyway, if you want to come back and make further follow-up information on this or another follow-up video, again, leave a comment, question, feedback down below. Other than that, make sure to subscribe down below. Totally free to do so. Share the video with your friends on social media. Go back and check out any of the other thousands of videos here on the channel. And until next time, enjoy your day. Take care. Have a good one. And check out the videos down below in the description or at the top of the comment section or in the video library here. And I'll catch you again later.